Hello everyone, welcome to my channel. This is Easy Accounting Channel. Today we are talking on registered education savings plans, that is RESP. So registered education savings plan is a contract between an individual, the subscribed, and the person or the organization, that is the promoter. So under the contract, the subscriber name one or more beneficiary and agree to make contribution for them, and the promoter agreed to pay educational assistance payments, EAP, to the beneficiary. There are two types of RESP. One is called family plans, and the other one is specific plan. So how an RESP works? The subscriber generally make contribution to the RESPs, and then the subscriber cannot deduct their contribution from the income on their income tax and benefit return. So the promoter usually pays the contribution and the income and on those contributions to the beneficiary. So the income earned is paid as educational assistance payment, EAP. If the contribution are not paid out to the beneficiary, the promoter usually pays them to the subscribers at the end of the contract. Subscribers do not have to include the contribution in their income tax when they get them back. Beneficiary generally receive the contribution and the EAP from the promoter. They have to include the EAP in their income for the year in which they receive it. However, they do not have to include the contribution they receive in their income. CRA register the education savings plan contract as an RESP and lifetime assets by the Income Tax Act on the amount that can be contributed for each beneficiary, unless the RESP is a specific plan. So the RESP must provide that no contribution may be made to the plan at any time after the end of the year that include the 31st anniversary of the opening of the plan. So here is an overview of how RESP works. A subscriber enter into an RESP contract with the promoter and name the beneficiary. Then the subscriber make contribution to the RESP, that is the government, and the promoter of the RESP administer all amount paid into the RESP as long as the income stays in the RESP. This is not taxable. Then the promoter can return the subscriber contribution tax-free, and the promoter can make payment to the beneficiary to help finance his or her post-secondary education, and the promoter can make accumulated income payment. So who can be a subscriber? Except for family plan, there are no restrictions on who can be the original subscriber under RESP. You, your spouse, your common law partner can be a subscriber. A public primary caregiver can be a subscriber. And the department and the agency that care for the beneficiary can be a subscriber. So if you're not the original subscriber, you can become a subscriber only if one of the following applies. You or your spouse or your common law partner or your ex-spouse or common law partner subscribe and get the subscriber rights under the RESP. So RESP contribution. So you're able to make contribution for a beneficiary only if the beneficiary social insurance number is given to the promoter, that is the financial institution, before the contribution is made, and the beneficiary is a resident of Canada. And the contribution is made by way of transfer from an RESP under which the individual was a beneficiary immediately before the transfer. So contribution rule, generally you can contribute to the family plan for the beneficiary who are under the age of 31 years old. However, transfer can be made from another family plan if one or more of the beneficiary are 31-year-old or older. So RESP contribution cannot be deducted from your income, tax, and benefit return. In addition, you cannot deduct the interest you pay on the money you borrow to contribute to the RESP. So contribution limit for 2007 and later, there is no annual limit for the contribution to RESP. However, the lifetime limit on the amount that can be contributed to an RESP is $50,000. So payments made to an RESP under the Canada Education Savings Act or under a provisional program are not included when determining if the lifetime limit has been exceeded. So tax on RESP excess contribution. So if excess contribution occur at the end of the month, when the total of all the contribution made by all the subscriber for the beneficiary is not more than the lifetime for the beneficiary, we do not include the payments made to an RESP under the Canada Education Savings Program. Each subscriber for the beneficiary that is liable to pay 1% per month on his or her excess contribution that is not withdrawn by the end of the month. So the tax is payable within 90 days after the end of the year in which an excess contribution was made. So you have to inform CRA of your share or excess contribution to your RESP. So there is waiver or liability. You may waive or cancel any of the taxes if we determine so that you will receive them, including the taxes enrolled because of the reasonable error. So who can become a beneficiary? You can designate an individual to be a beneficiary, the individual social insurance number given to the promoter, or individual is a resident of Canada when the decision is made. Thank you for coming to my channel. I hope to see you in my next video. Please subscribe to my channel and share my video.